Instagram today, and that's working after 17 million tries, right?
I have questions.
All right, cool. Q&A, tax questions, guys. This is where you guys literally can ask us any tax questions that you want. Right now is a month of February. This is the perfect time to start doing tax planning. And some of you are being reactive, like, hey, I made some money. And what else can I do to save money on taxes? I've got this big tax bill. Unfortunately, in most cases, there's not much that you can do because the year has already passed. And we take that phone. Thank you very much. Yeah, we'll take it. Yes, thank you. So unfortunately, because the year has already passed, can you still do some retroactive tax strategies going back? Yes, I'll give you an example. Is the camera live yet or not yet?
Yeah, this is turned off for some reason.
Okay, so guys, if you can hear me in the chat, let me know in the chat. But one of the things that you can do retroactively, for example, if you own a self-rental. If you own a self-rental, the losses produced from the self-rental can actually be grouped together with your business income and deducted. That's one of the examples that you can go back retroactively. What other tax planning can you do, Mariana? You've listened to me enough. Come on, what other tax planning can we do retroactively after we missed the boat? You know this.
No, not when we're live. And
You know this, come on.
trying to figure out Instagram because I don't see us here right now. Hold on.
So anyways, so bonus depreciation in section 179 planning, okay? So that's a big one. So you may have equipment that you purchase, but you may not need 100% depreciation deduction. Mariana, does that ring a bell? Mariana is nervous right now because
I never like to go live.
what happened to
there's
all the
just-
questions we had? Did they disappear? Did you do something again?
No. Odi, would you mind to share the first question that we had from Preet Vijal? Because that went away after I refreshed the screen. You know, like, the world is so techy now, it's scary. But
It's pretty awesome though.
I know.
And it's also made so easy to use and you still have a hard time using it.
You know, when our parents came to the United States,
Yeah.
we were like the ones setting everything up for them, and we were so techy. And I remember being like so upset when they would not get things right. That's how I feel right now. There's just so much things going on.
Yeah, I remember I was showing my mom how to use a computer. And now, I think even with an iPhone, people can, they don't even need anybody to teach them because everything is so easy, smartphones. Okay, awesome. Let's go some tax questions, guys. Let's get that going. All right,
Okay.
Mariana, let's go.
I have a question from B Gamer Studios. As you referenced, it's not a 2025 related question. How should a professional sports bettor navigate the gambling tax? 90% max deduction for 2026?
I will be honest with you, I'm not really too familiar with there is such thing as a gambling tax. I don't think there's such a thing as gambling tax, but I don't know much about gambling industry. I would have probably look it up, but generally speaking, if you're gambling, you can take losses up until your gambling winnings. So gambling losses up to gambling winnings. Now, if you're a professional gambler and that is your profession, I'll be honest with you, I'm not 100%. I don't know this area of the tax law very well. I could research it, but not for the purposes of this live. Just being super honest, sorry, was not much help there. What else we got?
Okay, 1 second. I have a question from Shmulik.
Okay.
Can you explain per diem meals reimbursements for 2% S corporation shareholders? Is it considered a non-taxable reimbursement to the shareholder?
Okay, so this was this question about per diem meals, right? So I'll be honest with you, I don't remember the last time I ever used per diem meals, but for those of you that don't know, if you're an employee and you can be reimbursed, or an employee of your own business, you can be reimbursed either for actual costs of the meal or per diem. Per diem, I'll be honest with you, like I said, I haven't used it in such a long time. Do we even still have it? But if we do, there's like certain rates, I believe, for certain states that you can reimburse yourself. And you're asking, can I reimburse myself per diem meals when traveling, and is this tax-free reimbursement? So the business gets a deduction, and you do not pick it up as an income. So yes, it's tax-free. It is not taxable to you. I hope that clarifies it. What else we got, Mariana?
I just follow up from B Gamer. He says, no worries, Boris. It's niche. 100% of profits are taxed, but can only do up to 90% of losses starting in 2026.
Well, I'll look it up. That's a good one. I don't know. I don't really have clients that are professional gamblers. The reason I don't take clients that are professional gamblers, I'm afraid I may then turn into one. I'm kidding. I'm kidding. It's like me on my Robinhood. Like I feel like I'm gambling. I know I have to stop myself on my Robinhood account. Okay.
Question from Mark New.
Mark New. All right.
Guys, we have people coming in. Just letting you know. Ask your tax questions.
Mariana, what do they win for asking a tax question?
Guys, if you ask a tax question,
Listen to this, guys.
we get a
Watch
free.
See, look how I'm watching. Yes. What do we get?
You get a free 30-minute consultation with
30 minutes. 30 minutes. So we will raffle off your name. If you ask questions, Mariana then pick the name. If your name is pretty, she will pick it. If your name is long, not pretty, will you still pick it? Okay, Mark Newman,
nice.
right? Mark Newman.
Mark New.
Okay, New. What's up, Mark?
Is it possible to deduct?
Let me know in the chat, guys, if this is helpful, if the way I answer your questions is helpful. If you have any follow-ups, don't be afraid. Just, you guys got me for an hour, so let's go.
Is it possible to deduct IRA, 401k, or Roth IRA account losses if related to fraud with no principal monies left in account? I'm happy.
This is a good one.
Good.
So we've got a SEP IRA, right? Or Roth IRA, or any retirement account, and the money was stolen from those accounts. Like if it was a fraud, can you deduct anything? I will be honest with you. I would have to do some tax law research on this. I don't know an answer to this question. I know I'm a tax strategist, but some areas of a tax law I've never dealt with. So I wouldn't know from the top of my head to answer you on this live. But yeah, this is a 2-1. This is number 2. I'm like, yeah, I don't know an answer. This makes me look bad, Mariana. This makes me look, maybe I should.
No, but
maybe
I mean,
you should answer tax questions. I don't know.
You don't want me to answer tax questions. But
Oh, by the way, guys, you guys can call in. Let me know in the chat if you guys want to call. We're going to give you a number to call. And we're going to put you on speaker, and you're going to ask your questions. Let me know in the chat if you want to call in. All right, what are the next questions?
okay. Mark New is asking to explain Section 162 tax code.
Well, give me specifics. What exactly do you want me to explain in Section 162?
Okay.
Okay.
Question from Carl Hens Amy. For Section 179 planning, does the owner
What's
have
up with you guys with section codes? I'm kidding. All right, let's go. Oh, my God. I feel like I have a lot of accountants on the call. Section 179. Let's go, Mariana.
For Section 179 planning, does the owner have to own the asset? What if they manage the equipment/asset? For example, owning a private jet company, but not owning the jets, only managing.
Yeah, so in order for you to take Section 179 depreciation or bonus depreciation, you actually have to own an asset. It cannot be that you're managing. So if you're managing an aviation business or, like putting people on the right flights, whatever that may be, that you're not owning the assets. So no, that is not for you. Yes, Mariana, go for it. What else? We
Okay,
got?
someone said first question about QBI is ignored. Preet, we're not ignoring you. Your question is not ignored. We just refreshed the screen and your question disappeared. If you don't mind, just drop it in the chat.
Or Mariana doesn't know how to use technology. If you guys want to call in, by the way, we have a phone number to share with you. All right, let's go, Mariana. What else we got?
Okay.
It's QBI question. What's the QBI?
They didn't do the follow-up, so.
Oh.
Oh, he didn't ask the question. Please ask your question.
Guys, yeah, Mariana had to refresh and some questions disappeared.
Yeah, because I know when we started, the questions came in and, okay. My son has an LLC and rents uses 20% of house for business.
Who is it, Mariana?
Oh, ID 5714.
Oh, okay, D5714. And
If you can share your name, that would be helpful.
Okay, ID 5714. Okay.
My son has an LLC and rents using 20% of house for business. If he rents it to himself, what category would that be for the business? Would it then be taxable income to him personally? Any way around it?
Okay, let's read this again. So son has an LLC, and he rents 20% of his home to who, does she say?
For business. To himself?
To himself, I guess. Okay. Oh, I think what's happening here, guys. Okay, what's the question? I love this question, by the way. We're going to answer it. What was the next thing? So son has an LLC.
What category?
Rents 20% of his home to the LLC, right? Okay.
So what category would that be for the business?
What category? Okay,
And
cool.
would it then be taxable income to him personally?
Yes, so...
Any way around that?
Yes, there is a way around that. Oh my God, I love this question. ID 5714. All right, cool. This is what's happening, guys, and this is what's happening, ID, right? So I'm going to call you ID because I don't have the name, unless you want to give us a name in the follow-up. So we have a business. I'm just going to put this like this. And we have a personal, right? Personal. So the home is being used 20%, right? It's being rented. The business pays rent to personal, 20% of using the home. So let's say that's about $1,000 a month. I don't know, I'm just making this number up to show an example, okay? So this is rent. So the business is going to take a deduction. But if you're renting your personal home, 20% of your home to your business, then you would have to pick up $1,000 in rental income. So the business gets a deduction, you pick it up as a rental income, and then you can take some expenses against it, but it's becoming a wash. There's not much expenses that you can probably take against it. What you can do instead, okay, is classify it as a home office. So if your son has an LLC, if it's a single member LLC, you can just fill out, or have the accountant fill out form, if I still remember correctly, 8829. I think this is the home office deduction form. If you're a single member LLC, if he's an S corporation, he would just do an accountable plan, and he will reimburse himself. Now, what's going to happen when you follow that, the business is going to take a deduction, but you will not pick it up as a rental income, okay? That's what you can do. That is the way around it.
So he's also saying on my previous question about my son's LLC, it is in a separate structure, a shop. Can reimbursement plan make it tax-free for him? What would they call it on their books?
Accountable plan would be the reimbursement. And on your books, you can call it rent expense. That's what we do for our clients. When our clients use their home office and they reimburse themselves properly through a different entity structure, like you said, let's say it's an S corporation, then that would be a home office. That would be a rent expense. Yes, that's how we do it for our clients.
Can you put up the call-in number?
Somebody wants to call? I forgot our number, Mariana. I'll tell you right now what the number is. Oh my God. I think I forgot the code for this thing also. No, I got it. Okay. All right. Can you read me the next question for now?
Yes, absolutely.
Oh, come on.
I have Preet's QBI question. Okay. Did Congress extend QBI for 2026, and is it going to be 23%?
Yes, 23%. No. All right. This is the number, guys. Let's just put the new number. 917 396 8780. 396 8780. Okay? 396. Oh, this is wrong. 396 8780. Okay.
Okay, if you would like to call
All right,
in.
if you guys want to call in, Mariana will answer the call.
Yes.
She's my secretary. Okay,
Give me
so
this.
the question is, did Congress extend QBI with a big, beautiful bill? Yes, it made it permanent, okay? It is 20%. The original proposal was 23%, you're right. But it is not 23%, it is now 20%. For those of you that don't know or haven't heard yet, it's been around for quite some time, 20% is a qualified business income deduction. So if you made $100,000 as a business profit, I'm just going to keep the calculation very, very, very simple, okay? You can take 20% of your business income, and that becomes a deduction for you. Now the calculation is like it's a lesser off 20% of your profit of the business or taxable income. In most cases, the taxable income is higher than the business profit because of other things that's going on, but just simple, keep it simple. Look on, I think it's line 10 or line 13 of your 1040 of your personal tax return. Take a look at that. If that number is blank, go to your account and be like, why is this number blank? Two reasons. There's probably a good explanation why it's blank, or they really missed it. And if they missed it, you can actually go back and amend your tax returns to claim the QBI deduction. All right, Mariana.
We're live on Instagram.
Oh, do we have any questions from Instagram?
Well,
For
we
those of
just
you that are
went- we
watching on
just
Instagram.
went on.
Oh, we just went on
Yeah,
Instagram?
I see us. I'm not sure if
So this was not working for Instagram before, you're telling me.
No.
You're telling me this is again something
Dan
you couldn't make
King
work.
joined on Instagram.
Daniel King. Woo!
Hi.
Hello, Dan. All right. What else we got? So you're saying we just got live on Instagram.
Yes.
All right, guys. We're live on Facebook, Instagram,
Should be TikTok
and
too.
YouTube.
YouTube.
TikTok also?
Yeah,
TikTok
I think
work?
so. Yeah.
Wow. You guys actually made it work. All right. What else we got?
Okay. Okay, I have a question from Dan Yak. Dan Yak, you actually won the 30-minute consultation last time with Boris.
Yes,
I
by the
don't
way,
know
guys,
if
we're
you-
going to be raffling off a 30-minute free consultation with myself. Dan Yak, you won last time. You didn't email us, so unfortunately it expired. I'm kidding, it didn't expire. But just email. All right,
Just
go, let's
email
go.
him.
All right, Dan Yak. Okay.
I have group term 401k for employees.
my
What's
God.
the max profit sharing for each employee after employee contribution and company match?
Oh, my head hurts. Okay, group term. What? Today's questions are like fire. Okay, group term 401k.
Oh, and we have a call in.
We have a call in. What's the...
It's based on employee compensation, or is it based on 70k max limit?
Okay, 70K max limit. I think you also asked something about profit sharing. Okay, it's 70K. If it's a, here's the thing. If you have a 401K, let's kind of talk about how 401K works. This is important for all of you guys, okay? This is important for all of you. If you have a 401K, okay, there is an ER, which is employer, and there is an EE, which is an employee, okay? Employer and employee. This could be you also if you're of your own business. So for 2026, what are the limits? I think it's 24,000. Damn, I gotta catch up with my tax laws. Okay, I think it's 24,000, 23,500, 24,000. Deferral, okay? Guys, don't quote me on this. I gotta look it up. But as an employee, you can put away a deferral from your paycheck. I'm just gonna use 2025 numbers, okay? So, because 2025 numbers, I know, okay? So $23,500. That's the maximum you as an employee can put away into your 401k. Your employer can match that. So if you're a business owner, you're like, what you want to do for yourself is have a safe harbor 3 or 4% match. Meaning to say, regardless of what the employee puts away, you're going to put away 3 or 4%. But some of you, like Dan is asking, may have a profit sharing. What is a profit sharing? Basically a way to say, you know what, it's not going to be 3 or 4%. We want to max it out. And let's say if the 401k max is $70,000, the difference will come in from the business. But when you do this for yourself, you also have to do it for all of your employees. So there is no discrimination. Okay, so you have to follow strict laws. Usually your financial advisor would work with a, what are they called? Third party. Anyways, they'll work with somebody who does those TPAs, okay? They will do all of those calculations. So, anyways, I hope this answers your question. Cool. We had a call in.
Yes, this is Shmuel.
By the way, Dan, let me know if this was helpful. Dan Yak, right? Let me know if this was helpful.
Guys, if this is helpful and you like these Q&As, can you just hit a like, hit a love?
All right, what is Shmuel?
Shmulik.
Shmulik.
Hey Boris, I had a quick question for a 2% shareholder of an S Corp. I know that the business could deduct the health insurance premiums. It's supposed to be added to his W-2 as taxable wages, but it's exempt from FICA.
Okay. What's your question? Shmulik? Shmulik? Okay, we lost him, but I think I know what he's asking. Okay, we have a 2% health insurance. Okay, health insurance. This is for the S corporation owner. Okay, so let's say your wages in the business, or your officer compensation, I should say, right? Oh, so we'll just do officer comp is $100,000. Okay, on this $100,000, you're gonna pay federal taxes, state taxes, and you're gonna pay FICA taxes. Okay, which is Social Security, Medicare tax, majority of it. Okay, that's what you're gonna pay. If you are an owner of your own S corporation, and you pay for health insurance, now again, you're allowed to pay for this health insurance either out of the business or personally. You just have to reimburse yourself. That's okay. And the health insurance does not have to be on the business name. It can be under your personal name. And on top of it, it doesn't have to be just for you. It can be for your family. Okay. So let's assume family plans right now is about $2,000 with kids and all of that stuff. Your health insurance is, right? Health insurance is about $2,000 per month. That's $24,000. Okay. Now, what's really cool about this is that you can include the $24,000 as part of the $100,000 salary. How does that help you? Because now you're going to end up paying federal income taxes, right? Because the $24,000 is going to come out on your personal tax return. So you're going to get a deduction, and the FICA portion right here is not going to be taxed on this, but it's going to be taxed on the $76,000, which could really save you. Like in this case, it would be $1,500, $3,000, about $3,500 in tax savings, easily. Okay, easily. All you have to do is just restructure how it's reported on your W-2. Here's the thing: most of the business owners, S corporation owners, they use a payroll provider. Any payroll provider. Doesn't all of the companies out there, all the payroll providers, all their systems, all their softwares have something that is called 2% owner shareholder insurance or 2% shareholder health insurance, whatever, one of those words, right? So you can absolutely do this, and it's just a matter of how you check off things on your payroll, and you're going to start realizing savings. What else we got?
We have a ton of people joined us on Instagram.
All right, Instagram. Hello, Instagram. So we haven't been able to go live on Instagram. Can I just sit down? Can we switch the camera over here? So you guys have seen Mariana a lot live on Instagram. Do we get to see comments on Instagram?
Yeah.
All right, guys.
Nobody said anything yet.
Everybody's quiet on Instagram. All right, guys.
But it's okay. It's your first time.
All my Instagram people.
We're just watching, observing right now. It's okay.
I'm talking. Why are you talking over me? I don't. Guys, I think more of Instagram fans know you more than the YouTube fans. I don't know, because we do a lot of Instagram. So guys, if you guys love Mariana, show her some love. Because after every live, she's like, oh well, just one person say hi to me. Guys, can we just show her some love? YouTube, Instagram, Facebook. Okay.
So LD5714 has a name. Name is Larry. Hi, Larry.
I want to read you guys a comment. Check this out. After we said, show me some love, right? Can I read that comment we have from this so-called fan?
Oh. Ooh.
Where is it? No, wait. Where would it be? Guys, check this out. So I have this video from years ago on
Nisim says, power couple. Boris, we love you.
See, they
Hi,
love
Nisim.
you.
It's Nisim.
Is this Mr. Akilov?
Yes, it is.
All right, check this out, guys. Wait. What is going on? Hold on.
We had a pretty nice comment.
Here, guys, check this out. So this was an older video. No, it's not coming up. Sorry, I was going to share with you guys.
It's not meant to be.
It's not meant to be. Yeah, maybe I shouldn't. Yeah, maybe I shouldn't share it online, right? No, wait. I'm gonna make it work. Hold on.
Guys, by the way, keep the questions coming. We have a
No,
lot
I
of
don't
time.
have it. All right, guys, let's go.
Take your questions. So I have
What
a
else we
question
got?
from Anne-Marie Stats.
Anne-Marie, guys, can we give it up to Anne-Marie? She's been a
Anne-Marie, I
tax
love
advisory.
Anne-Marie.
Why do you love to Anne-Marie?
She loves me.
How do you know she
remember
loves
her.
you?
I remember her. I remember her.
She said nice things about you.
Yes,
That's
she
why
did.
you. That's why you love her. Oh my God, guys! Anne-Marie has been a tax advisory client for a couple of years at least. And Anne-Marie, will you share with us how much money you saved on taxes using the BM tax strategies? But okay, Anne-Marie, let's go. What's the question?
Okay, if you have a property put into service in 2025, but renovations continue into 2026, and some of the contractor checks written in 2026, is it okay to do the cost seg in 2025 and then deduct the 2026 reno
Very loaded
Continue.
question, Anne-Marie. Obviously, you have a tax advisor at BM Tax that you can simply ask that question without coming to have to come on live. But I love the question. We're going to educate everybody about
And
this
she did
question.
say she does love me.
All right. Okay, cool, guys. So Anne-Marie is asking the following question. She has a property, okay, and the construction cost started in 2025 and it continued in 2026.
Continuation, by the way, her husband also qualifies as a real estate professional, and we are planning on using the property as a short-term rental, or should we
Correct.
wait
So you're
for
using all the
2026?
strategies that I gave you. That's perfect. So if the property was not ready to be used for rental in 2025, you cannot do, or you should not do, any cost segregation. There is no losses to take against anything. It's probably, everything would probably have to happen in 2026. For those of you that do not know, cost segregation is a study that is done on your property to give you an accelerated depreciation. A lot of times when you buy a property, you go to your accountant, and the accountant takes either 27.5 years, which is for a residential property, or 39 years, which is for commercial property, just regular depreciation. Doing cost segregation can accelerate for you. That's what Anne-Marie is asking. Boris, when should I do that acceleration? If the property is not ready in 2025, Anne-Marie, doing 2026, and knowing your situation, Anne-Marie, and I was actually looking over your stuff the other day, believe it or not, okay? Yeah, I think you've got enough deductions for 2025. So if I remember correctly, so you're good. So if the property was not complete in 2025 and you're in 2026, you're totally fine. That was great to see you here, though. All right.
And by the way, our names are like,
Who, Anne-Marie and Mariana?
yeah.
I guess.
Okay. And she's, I don't know if she asked, can we take all the expenses in 2025, even if they're paid in 2026?
No, I
you
answered that
you
question for
answered,
her. Okay, cool.
Instagram is showing a lot of love. Hi,
How do you
Leah.
know that? I don't see
'Cause
anything.
I see it.
Oh, this is how the comments come up?
Yeah. I
Okay.
can't see them in the other location. I kind of have to go back and forth. But someone said, Boris and wife, thank you for all you do. A comment from Dan King. Hey, Boris, if a client has a $5 million long-term cap gain, just realized last week.
Yes. So we got a great question over here, guys. Check this out, right? So we've got a client, we've got a person that has, by the way, this happens a lot in like November and December, but I'm happy this happened to somebody in February, right? So like this is like, wake up. I have a capital gain of $5 million. What do I do with my capital gain, $5 million? There's two things that, one thing that you should have done, and the second thing is what you can do, okay? Before, and guys, this goes for everybody. Every business owner, every individual knows for a fact 100% that they may have a capital gain at $5 million, right? They may know in advance. It may happen instantly, but they know they're kind of getting there. Because there's actually strategies in our tax code that can be done in a way where you may not even pay any taxes on something as $5 million capital gain. You might say, Boris, how is this even possible? So let's just take one example. Let's say the $5 million capital gain, and I don't know where this one is coming from the comment, but let's say this came from the sale of the business. If this came from the sale of the business, you could have structured your business from the get-go when you started the business, but again, you would know this if you work with a tax advisor, for something that's called Section 1202. Under Section 1202, you can exclude up to $10 million in gains for sale of the business. Okay, it's a qualified small business stock, QSBC. It's a, you might be thinking, Boris, QSBC, you might be thinking qualified small business stock. You might be thinking, Boris, this is not possible, never heard of it. There's no such thing. It is like black and white in the tax code, absolutely possible. It's being done by a lot of people every day, every single day. And I have clients that are currently, when they started the business, they're like, I'm going to exit this business, big millions. Great, let's set you up from the beginning so that when you're ready to sell, you're going to be under Section 1202, okay? Up to $10 million excluded. And here's the thing. If you have a spouse or you have children, if you can set it up in a way, right, where it's up to $10 million, for each individual. So if you exited 30 million, could be 30 million tax-free. But let's say it was not the sale of the business. It was something else. You sold the crypto.
Sale
You
of
sold
gold.
silver.
Gold.
Oh, gold, right?
I thought it was
Amazing,
gold.
right? Gold, right? Guys, what is that? How does the Trump do it? This is amazing, right? No, I can't.
You did it. When
I
did
did
you-
it yesterday.
Yeah.
Okay. Anyway, somebody sold gold. Yes. Now it's after the fact, right? I've got a 5 million. Is there still something that I can do? Well, again, depending on what your tax situation is, what type of investments can you do? Can one of your spouse or you qualify as a real estate professional and invest into some kind of a real estate where you can get a really nice depreciation? Everybody's situation is different and everybody's approach will be different. What you need right now, if you have a $5 million gain, get yourself a tax advisor and start strategizing. Right now is a perfect time because it's only the beginning of the year. So you have plenty of time to do some strategy. Mariana, that was good, no?
That was great.
was pretty
Thank
good.
you.
Thank you. Thank you. All right.
Guys, if you're watching on Instagram, if you're watching on YouTube, if you're watching anywhere, go to 7taxwriteoffs.com. We have a link in bio, 7 tax strategies you can start using for your business. We have more questions. Can
Let's go.
tax planning be done for trusts?
Can a tax planning be done for trusts? This is like a loaded question that you want me to answer.
Instagram is today
On
is
the
a pretty
live, right?
loaded
So
day.
can tax
This is
planning, I'm
Instagram.
just gonna write tax planning for trusts. I'm gonna put this in the box and I'm gonna say you can use trusts for tax planning, especially for generational wealth, right? This is more like for your kids and your grandkids. So trusts can be very powerful tool for asset protection, for tax planning, for future tax planning as well. Again, gotta speak to your tax advisor that understands trust and can help you use the trust for the tax planning. Yes, what else we
Carl
got?
Hens Amy is asking
Who?
how Carl Hens Amy.
Amy.
How do you create an accountable plan?
How do we create an accountable plan? Okay, so Amy, great question. We are going to, you know what? We're going to raffle off the accountable plan also.
Okay.
Oh no, we're just going to give it to Amy. We'll give it to Amy. Amy, if you email boris.mushev@boris7tax, Mariana, put that in, we're going to give you an accountable plan, okay? An accountable plan, for those of you that don't know, is a piece of document. Look at this, Mariana. Look at my art. Look at my art, Mariana. All right, an accountable plan is a piece of document, okay? It's a piece of document that allows the business to reimburse employees for business-related expenses. Now you, as a business owner, can reimburse yourself for working from home, for using your personal car, through an accountable plan. It's a piece of document that needs to be prepared, signed, and stored away. You do not have to file it with the IRS. You just have to have a written reimbursement agreement that will allow you to do that. Follow the rules in it in terms of like when do expense reimbursement have to be submitted and when expense has to be reimbursed. All right, what else we got?
Okay.
By the way, for those of you that are just joining us for the first time, we go live every Thursday at 3 p.m.
3 p.m.
3 p.m. to 4 p.m. I do have a hard stop at 4 p.m. After I leave, Mariana does this amazing raffle. She gives things away. And what else did I want to say? Oh, if you're new, if you're not on YouTube or watching this on YouTube, subscribe because every week I'm releasing a really nice tax strategy video. What's that video we recorded this week, Satra? What was that? We recorded Trump accounts. Guys, let's talk about the Trump accounts. Woo! I'm releasing a video on that next week. Let me know in the chat whether you're on Instagram, Facebook, or YouTube, or TikTok. Do you want me to tell you about Trump accounts, guys? Come on, let me know in the chat. If I don't get enough responses, we're not doing it.
You get first-hand dibs.
Guys,
First-hand.
Trump accounts. I will tell you exactly how it works today.
Okay, hold on. I just got an error message. Are we still live?
Should we like?
Mariana, you broke it again?
What happened? I didn't do
What's the
it.
error message?
Or maybe you're off the Wi-Fi. Your Wi-Fi
No,
is down.
I am on Wi-Fi.
Which Wi-Fi are you on?
I just got an error.
It's your laptop may not be on.
Yeah, we're online.
We're online. Okay, so looks like you see you can switch the screens, right? Okay, cool. So I'm guessing we got the yeses because Mariana broke the internet again.
I guess you guys broke the internet. You guys asked for the yeses.
Okay. By the way, I don't know if you guys following the stock market. It's like dipping
Oh, I
today.
got yeses.
Okay.
Why So Serious would like from Instagram would like to see the Donald Trump dance. Who are you? Why So Serious?
All right.
I see us back again. You're
All right, we're
right.
good?
Yes.
All right, who wants Trump accounts? Guys, we didn't get enough answers.
Yes, guys, comment down below.
All right, we're not doing Trump accounts.
Just say yes, yes.
This is, by the way,
yes,
the
yes.
Trump accounts for the kids, 5,000 or more. Putting in 5,000. No Trump accounts. I'll still talk about it. By the way, we have a hard stop at 3:55.
Okay, let me go back.
All right, are we good? Let's do Trump accounts. So we are releasing a video. Is it next week, Satra? We're releasing a video on Trump accounts. What is Trump accounts? So if your child, here's the thing. First of all, government is giving you $1,000 for your kids. If your child was born in 2025, 2026, 2027, and 2028. So, if your child was born in 2025, government is giving you $1,000 to that child's account. 2026 just started, didn't have the babies, thinking about making the babies, time to get busy, because 2026, 2027, and 2028 babies that are born in these years will get seed money from the government, $1,000. Now, what is a Trump account? It's basically an investment account for your children. So, you can put away up to $5,000 into each child's Trump account, okay, up until the child turns 18 years of age. Now, who can fund each child's Trump account? That could be either the parents, the grandparents, the relatives, whatever that may be. They can fund a Trump account for that child. If a person puts $5,000 into the Trump account for their children, it is not tax deductible. Not deductible, okay? Not on your personal taxes. I'll talk about business, by the way. Great strategy for the business owners if you stick around. Not deductible. When the child turns 18, this money, basically the traditional IRA rules apply. I know it's complicated. So government says, oh, traditional IRA rules, if you take the money out, we're going to tax you. So not the best tax structure, because you go put the money in, you don't get a deduction. You take the money out, you pay taxes on it. Not the best structure, okay? Now, there are some exceptions to the rule that the money could be taken out for small businesses. So basically, the government says the child can take out some of the money from the Trump account if they're starting a business, which is really, really cool. Okay, now that's that. Now, you as a business owner, by the way, any comments on Trump accounts?
Everyone wants them.
Okay, Trump account for business owners. This is like legit awesome. Check this out. Okay, so I'm just gonna write Trump accounts business owners. If you have employees in the business, including your own children, all right, we're gonna talk about hire your children strategy in a little bit, but I did the whole video. We're gonna be releasing it next week if we're on schedule, but I think we are. Okay, right, Satra, we're on schedule. You sure? Okay. Okay, Trump accounts, guys. So, you can put $2,500 into your employee's children account and get a tax deduction. Employee's child. So again, if you have your own children working for you in the business, listen to this. You put $5,000, you can take a deduction, but if personally, right? But you can put $2,500 from the business and $2,500 from the personal. Now the $5,000 was not tax deductible, but $2,500 now becomes a tax deduction. You have to offer this benefit, of course, to all of your employees. And again, this is a really, really cool benefit. But remember, the government is giving $1,000 to your children, to your employees' children, if they were born in 2025, 6 planning to be born 6, 2027, and 2028. When I heard about this, I was in the kitchen. It's like, Mariana, when was our daughter born? The younger one, she's like, oh, she's like, 2024. I'm like, you sure it's not 2025? She's like, no, we missed $1,000. She was ready to break a plate. Anyways, all right, cool. Awesome. What else we got, guys? Any other questions?
Yes, let me just... question from Shmulik. Can I still claim The Schedule 1 self-employed health insurance premium deduction. It just disappeared again.
Yeah, that's a health insurance question again. Okay. Can I? Well, it keeps.
Yeah, I don't know why.
Don't we have the internet? You know what? I will bring a box next time. We can do Wi-Fi here. This is like a makeshift studio, guys. So bear with us. Okay.
Yeah, we're not in our office. We're across the hall from our office, so that's why it's
I need to see the Donald Trump dance. I did it.
Yeah, that
Did
was-
you not see it?
Yeah, I read that one out.
Okay.
Guys, show some love to Boris.
I don't even know people showing me love. Just что-то сказал, да ну ладно. Okay, what else we got? Am I live still?
You are live.
What's this? Oh, this is Instagram.
This is Instagram.
Oh,
this
okay.
is Instagram.
This is how it looks on Instagram.
Oh, okay, hold on. I have
I have a single member LLC just starting, so only made $30,000 in the first year, mostly going to startup expenses, so no room for reasonable compensation. Is it still advisable to elect an S corporation, or I can do that in a few years? So, Meta, let me answer that question. That is a great question, guys, okay? Listen to this. If you are a new business, okay? New business. I always recommend clients. People ask me, Boris, what type of an entity should I open? We, for our tax advisory clients, we always recommend going with an LLC. Why? Because LLC has a flexibility later on when you want to do some tax planning as the business becomes profitable to elect how it wants to be taxed. You can elect to be taxed, either stay as a sole proprietor, okay? Or, meaning, excuse me, it is being taxed as a disregarded entity as a sole proprietor, okay? Then, so I'll just write disregarded entity. Or a C corporation, again, a very high level planning. If you have really, really high profits, it could be a great opportunity, depends. Or an S corporation. But the question becomes like Meta's like, Boris, this is my first year in business. I made $30,000. Do you recommend I elect an S corporation, and when should I? Look, when you elect an S corporation, there's few costs to consider. Cost number one is that you would have to file a separate business tax return, for which your accountant, depending who you work with, may charge anywhere around $2,000 or more. Okay? Some may charge you maybe less, but let's just stick with the numbers that I know. And you would also have to pay payroll processing fees to process payroll. So the cheapest payroll processing software I think I've seen online is about $60 a month. So that's about $720. Okay? Then you would have to pay your state unemployment, disability insurance, whatever that may be. Like I know we have to do that with the New York, even though you're an owner. So that's another, let's say, $500 approximately, okay? So now you're looking at $3,200 extra expense by becoming an S corporation, but you're not profitable enough yet. There's a lot of calculations that go into seeing, hey, does this make sense to me? A lot of tax professionals, they say, oh, if you make $40,000 or you make $60,000, I used to say 60 until we start having QBI, qualified business income deduction, because when you have a $60,000 net profit, you take a salary, you reduce down your QBI, kind of everything washes out and the net effect is almost zero. So for our clients, if anybody asks us in our firm, we say, hey, when your net profit in your business is $100,000, that's when it is a good idea to become an S corporation. Now, some states, such as New York City, does not recognize an S corporation as a pass-through entity, and they impose extra 9% tax on it. So when you are making $100,000 and you are in New York City, that may not be as beneficial. It could almost be a wash. It depends. Most states, of course, don't have such a high tax on the S corporation. So please, when you're doing any type of an S corporation planning, make sure you speak to your tax advisor and do tax planning, because S corporation entity could be so powerful for you. As a matter of fact, we were just working on a tax plan. Listen to this, guys. Listen to this. You're going to love this, right? We were working on a tax plan for a client that just enrolled for tax advisory service. It is husband and wife business, okay? Check this out. Husband and wife business. Net profit, so there is a multi-member LLC. What does a multi-member LLC means? It means an LLC with more than one owner, so two partners. So it happens to be husband and wife. They make net profit after all of the expenses, $2.5 million. Okay? And it is not an S corporation. And it's their operating business. There is nothing special about theirs. There is no real estate. It's just an operating business, okay? $2.5 million. And they are partners. So each one gets to report $1.25 million. On their personal taxes, it gets split in two. The first $184,000, I think it's $184,500 if I'm not mistaken. That's the limits. Okay, they pay 15.3% tax on this. That's a lot. Here's the kicker: the difference is about $950,000. They pay on the $950,000, 2.9% Medicare tax. That's about $30,000, close, like $28,000, right? That's about $56,000 in extra Medicare tax. So let's say their reasonable compensation actually came out to be $184,000. Let's say they were maxing out Social Security, right? Even if they do that, by converting to an S corporation, and I looked at their tax plan right before this Q&A actually, they were saving about $60,000 on the Medicare tax. It's very, very big. There is still a lot of business owners out there. And she said, the client said to her, she's like, yeah, I've been wanting to do an S corporation. It was not elected. Now my accountant is going to do 2025 taxes. And they're going to report $2.5 million as a net profit. They're going to overpay at least $60,000 of Medicare taxes. Okay, in 2026, we're actually going to do proper election for them. We're going to file for an S corp before March 15th. We're going to set the husband and the wife on salary, and there will be a reasonable compensation. All right, I've got 6 minutes before I do a hard stop. Do we have any more questions?
Yeah. How does research and development work?
Okay, this is a question from Carl, right?
Carl Hans Amy.
Guys, Amy, research and development tax credit. So we live in the world of technological boom, right? AI, vibe coding. That means that people now start developing their own softwares. A lot of softwares are being created. A lot of things are being created in the business. Guess what? It qualifies for research and development tax credit. As a matter of fact, with the one big beautiful bill, the research and development credit, 100% deduction is back. Let me give you a quick history, okay? Before 2022, you could deduct 100% expenses, and you take a credit, okay? Then, after 2022, you could only deduct, amortize over 5 years. That means you get 1/5 of a deduction every year until the expense is used up, and you get a credit. So it actually disencouraged a lot of companies, and some of the seminars that I attended, they said it puts some startups out of business because this is what they rely on. And what do you mean if the company spent $500,000 on research development, you can only take $100,000? The credit is not that big. I'll tell you what the credit calculation is in a second. Now, with 2025, with the one big beautiful act, right? It is now back to 100%, and you get a credit. How much is the credit? I'm going to give you a dirty back of the napkin type of calculation. It's about 10% of your research and development. So research and development, let's say you spent $800,000. 10% of that is $80,000 you get from the government. And how much can you deduct in the first year? You can deduct $720,000. 100% of expenses minus what you received as a credit. That's That's $720,000. So the credit is pretty big, even though you lost some of the deduction here, but you still get the credit outweighs what you lost. Now here's the thing. I wanted to give you another example here. What did I want to do? No, I think that was it. That was it. Okay, cool. I hope that answers the question. All right, I got 3 more minutes. Let's go.
Does ERC still exist, or is it discontinued? How does that benefit?
I'll answer this quickly. ERC is an employee retention credit. It exists in a way that you cannot file for it anymore, but some companies are still receiving it back. And here's the thing, it used to be when you got the ERC tax credit, employee retention credit, you would have to amend the prior year returns. I believe, if I'm not mistaken, they came out with clear guidance, further guidance saying, hey, so many years passed, if you receive the money, just report on this year's income tax. You don't have to amend it, but please speak to your tax advisor. But the point is, to answer your question, the ERC still exists in a way. There are still some companies still receiving some of the money that the government owed them. Okay.
I use about 1.5 acres for my company. Can I rent myself part of the land? What options do I have?
Meda says 2.5 million in profits. I need that multi-member LLC. Meda, you and I both. I wouldn't mind a side LLC with 2.5 million. All right, what's the question? Can I bring it up here?
Yeah, question from Eduardo.
Eduardo, hi Boris. I use 1.5 acres for my company use. Can I rent myself part of the land, or what options do I have? Depending exactly what you use it for, it's 1.5 acres. That's a lot. You could still, if it's part of your personal property, you could still do an accountable plan. Again, do you have a building on it? Like, did you build a separate dwelling unit for the business there? Like, honestly, we'll probably have to speak to your accountant. I know we have clients and still have clients. Those two clients in California, two partners, have a separate dwelling unit. They built it in the, what do you call it, on their property. And through an accountable plan, actually some great reimbursements we did for them. So yeah, speak to your tax advisor. What else we got?
That's the health insurance question.
Health insurance deduction question. 2% shareholder of S Corporation business deducts the premiums, gets added to the W-2 as taxable wages, but exempt from FICA. Yes, I did say that, Shmuel. Okay, cool. What else we got?
No, I think
we answered it all.
Yeah, let me check
Are we
over here.
gonna pick a winner?
Yeah.
All right, Mariana's gonna pick a winner, guys. Mariana's gonna pick a winner.
We're gonna pull up the.
Oh, you're gonna do the wheel on the thing?
Oh, are we gonna be able to? On the thing?
Yeah, check I have the internet on.
Ew.
Cool. So I can go.
You go.
All right, guys. Thank you very much. This was amazing.
Guys, if this was helpful, just drop a heart in the chat. Drop a heart, please. Like, it just helps. Like, I know question. You guys were amazing.
It's not enough how many hearts I dropped for you. You want the hearts from
Yes,
them.
I want the hearts from you. I want the hearts.
This is
from
the
you.
generation we live in. We need a validation
Yeah.
from social media that we're being loved. All right, guys. Thank you all. I am out of here.
Meda says, I've never won anything in my life. Just saying. You know, a few lives ago, someone also won something, and that was the same exact thing they said. They said, I never won anything before in my life, and this was pretty awesome. I think so.
So we'll email. We owe her a what do you call it? An accountable plan. Okay. Thank you, guys. Oh, my.
Yeah, don't. Boris just left with his mic. Last time he did that, everybody heard his whole conversation outside of the YouTube channel, which was pretty funny. There we go. Turn that off. So Sasha over here is getting the wheel of names. And you guys can just continue, drop hearts. Who's ready to win something? There were a lot of questions today, which was amazing. There's a lot of chances, or one chance for somebody to win. I wonder if we can use one link and then just keep that. Yeah, I think that would be good. See, we're getting there. We're learning.
Can you ask Odin, like, if, okay,
While we are waiting for the wheel of names to appear miraculously in front of me. If you don't have a tax advisor and you want Boris to be your tax advisor, schedule a call at taxplanningcall.com, or you can download 7 tax write-offs, just 7 core strategies for business owners. And the wheel is up. I'm gonna go spin it. Let's see. I'm ready?
Yep.
Okay, let's go. Okay. If you ask the question, your name is here. 3, 2, 1, go. Spinning. And, oh, wow. Meda, congratulations. You not only get an accountable plan, you also get a 30-minute free consultation with Boris himself. Congratulations. boris.musheyev@borismtax.com. Send us an email. We'll send you a calendar. And thank you again, guys. Please put this on your calendars. 3 o'clock every Thursday. Ask the questions. Okay.